Hey everybody, today is Friday the 13th of June 2025 and the market sold off here on some macro news. Not really that bad. I mean 1% for the S&P, 2.5% for the semiconductors, and surprisingly Ethereum was down the most. So let's take a look at the charts and make some sense of it. The S&P 500, actually let's start here. Let's start with this look, which is of course on TradingView, where I have the 5-day moving average in orange. And you can see we're below the 5-day moving average in the S&P 500, in the NASDAQ, in the semiconductors, and the Russell 2000. So that means going into next week, we're going to be looking at this market as a little bit more cautious. The next level of potential support is right here at the anchor off of the May 23rd low for the S&P and the NASDAQ. For the semiconductors, same area. The Russell is down at that level right now. We'll get a little bit more in-depth detail into that in a moment. The big mover was oil, and this is a daily chart. This is the high from 2023. This is the all-time high in oil, so the anchor from that is well below us. What we've been talking about the last couple weeks is that the failure in the XLE to break down could mean that they were getting ready to turn around. Now, no one would have expected the reason for it, but this is now definitely a failed breakdown lower. We had a fast move higher right up to this trend line here for oil. So, we came up to that level and backed off. We gave back about half of its gains overnight, but still oil, going forward, this is a failed breakdown, and I think that higher oil prices after maybe some consolidation are likely here. And that doesn't mean that I expect it to go exactly like that, but we need to digest this big move unless things really blow up, and then we would be looking at the anchor off of the high from over in here 2022. Well, we have this up. Let's take a look at Bitcoin. It's right on its 50-day moving average. Ethereum is below, still having trouble with that 200 and coming down into here. Now I still have a 20% position in here. I had added to some, and then I had sold that additional piece. And then Solana, I bought some at 148 this week, and I'm sorry, 158. And I'm thinking that if it makes the low, if it breaks below, if this wasn't just a quick undercut, then I'm most likely going to get out of Solana. It came up to this prior band of support and the 200-day moving average. Then we now look at this as a lower high below those and a lower low. So if it breaks down further from here, I'm going to get out of the Solana that I hold. That's the way I'm looking at those. Here are our big cap NASDAQ leaders, starting with Apple, which is below its declining 5-day moving average and has been the worst. Amazon, a little bit of profit taking. Same with Google, Meta. Microsoft still holds the strongest. Netflix, a little profit taking. Nvidia, a little profit taking there as well. And Tesla's turning back around. Let's take a look, as I just mentioned, on the TC2000 charts. And here's the SPY. On the left, of course, is the daily time frame. We're still heading towards that all-time high, and we're only a couple percent off of it. We're holding above the rising 20-day moving average, which is above the rising 50-day moving average. And we've got shorter term, though, the intermediate term time frame. This is the month-to-date anchor. We dropped below that. This is the anchor off that May 23rd low. So, 520, 595 is likely to be an important level for this market. Maybe we undercut this 20-day moving average a little bit and then turn around. But you have to be aware that right now the pattern on the intermediate term trend is lower highs and lower lows. So I'm not looking to buy a pullback to this level. I don't buy pullbacks. I don't buy dips. I buy strength after. And sometimes I pay a little bit more than other people, but I have the benefit of having momentum in my favor rather than just trying to blindly buy at a level of interest. This is a level of interest. It's not support. We'll know in hindsight, as we always do with any level of support, where support was. We might end up doing this, undercut this, grab some stops, and then turn higher. So the bottom line is, going into next week, you've got to be a little bit more cautious because all of these markets, the NASDAQ included, are below a declining 5-day moving average, and the pattern that we had seen of these higher highs and higher lows has flipped to lower highs and lower lows. That's when the market is telling us, be cautious. Reason doesn't matter. It truly does not matter. What matters is price. Only price pays. Most people were expecting this market to be down a lot more than it was today. And, the market doesn't care about our opinions. It doesn't care about my opinion. I don't care about your opinion. Nothing personal ever. But I'm interested in the opinion of all of the market participants. And that's exactly what the chart shows us, is what is the average participant thinking. It's profit taking mode. Is at least according to the way I look at it. With a declining 5-day moving average, we have to at least be cautious during these periods. And if it turns around, great, we'll find a new entry. But if this market, something bad happens and it drops down to 500, I'm not going to be standing around for, with a 5% loser wondering what happened. I'm not going to buy dips. Russell 2000 came exactly to where it was supposed to, and find some supply. So let's just clean this up a little bit. Go back to last week's video. This is exactly the level we were talking about. This here, of course, is from this high to this low. We rally up. This is 61.8% retracement, often a level of supply. And that was also met with the declining 200-day moving average. So it had a very nice rally right into the level where it was supposed to find supply, and this was prior support as well. So there were three reasons to think maybe it would be resistance. Now, I didn't short it there. I looked at it and said, if you're long, you've got to look at it and say, these are your higher lows. We're approaching a level of potential supply, potential resistance. We know now after the fact, yes, it was resistance. It doesn't happen that way all the time. If you recall, that we didn't find resistance at the 50-day moving average on the way up, or the 20-day moving average. So what we're looking at now on the shorter term time frame, that pattern, and this is what I was telling people, is if you're long the Russell, you've got to put your stops underneath these higher lows. And this was the proper place to exit because that was the higher low break. And now we've got a pattern here that's very clear, lower highs and lower lows. So, this might be a level where it finds buyers and ends up going sideways for a couple days and then continues to move higher. That would be the best thing for it. Never a prediction, but a scenario. We're at a level of interest. We're at the 50% retracement. We're at the 20-day moving average with the 2-year anchor. Maybe we continue to pull back down to the year-to-date VWAP. Maybe we pull back down to the 50-day 50-day moving average, and the anchor off of the April 7th low. I don't know. No one does. So I'm not going to blindly buy into here thinking it's down too much. It's at the 20. I'm going to wait for evidence next week to say, okay, are the buyers gaining control? If so, where do I set my stop? How much risk am I willing to take? What time frame are you trading? By the way, tune in on Twitter, on X, on Sunday evening at 8 p.m. Eastern. I'll be doing my live show there, taking requests about individual stocks as well. And I do that every Sunday. You have to be on Twitter to see it. If not, some people tell me, well, I don't like Musk and I don't like X. Well, get over it. Just, go get the good information wherever it is. Anyways, let's take a look at the semiconductors. They, came very close to the year-to-date high, not the all-time high. The all-time high was last year, but they came very close to that. And what happened here? Same exact thing. What are these green arrows? These are the green arrows. These are the higher lows that I talk to Alpha Trend subscribers every single day of the week and say, raise your stop up under here. Doesn't mean, it might not turn back around, but once the pattern of higher lows is broken, we no longer have an uptrend. So when the uptrend is over on the time frame you're looking at, if you call yourself a trend trader, why on earth would you continue to hold it? This is your exit point. Now we're on the month-to-date anchor. There's nothing indicating that this is support. We'll look at this. I look at this and say, it's a level of interest, but we have a pattern of lower highs and lower lows. It's extended on the shorter term time frame. Maybe it pulls back down to the 20-day moving average and the 250 round number that was prior resistance. So do I want to hold it for 6 points down as it does something like this? Not a chance. I would rather be on the sidelines in cash and see where it settles down. And by the way, you don't have to be a full Alpha Trends subscriber to get the daily videos and the midday updates. That's also on Twitter for just $10 a month. It's really an incredible deal. Biotech stocks, they ran right into where they were supposed to. This is what I'd drawn in earlier in the week saying you've got to be careful. We're coming up to the anchor off of this high. It's been important in the past. We came up to it right here. And no, I don't sell short there because I don't know that it's going to become resistance, but I look at it and say that's a level of interest that it might pull back from. So what you want to do is raise your stop up underneath the higher lows. And when the higher low right here was broken, that was your cue to exit right there. Not at the high. That's unobtainable to get the highs and the lows. What we're looking for is once we see the pattern of higher highs and higher lows revealed, and if we can get a low risk entry, we get involved and we ride it until the market tells us to stop riding it. So right now, maybe we continue lower. It's guilty until proven innocent going into next week. Financial stocks, they're down to the anchor off of this handoff, this low right here from April, whatever date that was. And if that fails to hold, then we've got the 50-day moving average right here, this dashed blue line, along with the year-to-date anchor. So I don't trade these, as I said. Energy names, they got some bounce in here today. This is a group that I've been talking about with Alpha Trend subscribers this week. They're clearly extended here. They've run right into the 200-day moving average. Buying here is not a low-risk endeavor. Chasing it today, be very careful if you did get involved in energy names. Ask yourself, as always, where has it come from? It just came from 80.5 to 88.5. It just had a 10% rally from the beginning of this month. And now, where does it have the potential to go before it's likely to encounter a source of supply which might become resistance? Well, the 200-day moving average is often a place where we find supply. If we look at it, we're right in the thick of this big range that had been involved in. Certainly, there are people in here, looking to get out even, but it doesn't mean sell either. Raise your stop up underneath the higher low that makes sense to you if you're long the energy names. Let's talk about, Apple. I guess I was going to talk about that because this is really the weakest of the big ones. This is below the anchor off the April 7th low. And we've got a declining 20 and 50-day moving average here. Apple is just ugly. I would stay away from this one. Tesla is behaving a lot better. It had a little bit of trouble where it was supposed to at this prior band of support at that 20-day moving average, that red line in there. But today it pulled back to where? Right to the rising 5-day moving average, and buyers stepped in. I think if this continues to build like this a little bit, that next week you might be able to see a continuation higher in that. SMCI, I was bullish coming into the week on this. It broke down. I got out of the balance of it today. Done with that one for now until it sets up again. NVIDIA seems like it wants to break higher. It was unable to do so. Now I'd be very careful with it in the intermediate term because it's below that 5-day moving average. Have a strategy for being involved in the markets. Have a common methodology that you can employ so that you're not making emotional decisions like so many people tend to do. Have a good weekend, everybody.